Video 5. What is airbag mechanism? This chapter is meant to help you understand the purpose of an airbag mechanism and its application. Airbag mechanism is a safety mechanism that is built into the daily leverage certificates to reduce the negative impact of an extreme move in the underlying asset during the day. In volatile markets, the airbag mechanism can provide some valuable loss protection to investors. Each daily leverage certificate will have a preset trigger for the airbag mechanism. This trigger is usually activated upon a 10% movement in the underlying asset for a 5 times daily leverage certificate and a 20% movement for a 3 times daily leverage certificate compared to previous close or previous minimum observed level if an airbag has already occurred on the same trading day. The airbag mechanism will only be triggered upon movements of the underlying asset that goes against the direction of the daily leverage certificates. For example, if the underlying index falls by 20%, the airbag mechanism for 3 times long daily leverage certificates will be triggered as the value of the daily leverage certificates will go down with the fall in the underlying index. But the airbag mechanism for 3 times short daily leverage certificates will not be triggered because with the fall in the underlying index, these daily leverage certificates will increase in value by 60%, calculated as 3 times 20%. How does it work in practice? Let's see the illustration with a 5 times daily long relating to a leveraged index. When the underlying asset reaches the stated airbag trigger level during the trading day, say 10% as denoted by A in the diagram, the airbag mechanism triggers an intraday reset. The trading of the daily leverage certificates is suspended and a 15-minute observation period begins. During the 15-minute observation period, the lowest level of the underlying asset is recorded. This level is termed the minimum observed level, denoted by M in the diagram, a 13% drop compared to the last closing level in the previous trading day. The performance of the 5 times daily long will be based on this minimum observed level. The leverage of the daily leverage certificates is subsequently applied to the performance of the underlying asset, computed from this minimum observed level, instead of the last closing level in the previous trading day. Resumption in trading of the daily leverage certificates, denoted by R in the diagram, happens 30 to 45 minutes after the airbag mechanism has been triggered. There are 2 scenarios in this illustration. In the first scenario, you will see the underlying asset continues on a downward trend. The airbag mechanism serves to slow the rate of loss for investors holding this 5 times daily long. Without the airbag mechanism, an additional 7% fall in the underlying asset would result in the 5 times daily long being worthless, denoted by 0 in the diagram. This is because a 20% fall in the underlying asset would equate to a 100% loss on the 5 times daily long. With the airbag mechanism, the investors with the 5 times daily long would suffer a loss of 79%. In the second scenario, you will see the underlying asset rises back after the airbag mechanism is triggered. The airbag mechanism would actually work against the investors as it reduces the ability of the daily leverage certificates to recover. This is because the subsequent gains are now based on the minimum observed level, denoted by M in the diagram, which is a lower value of the underlying asset as compared to the previous day's closing price. In this scenario, without the airbag mechanism, the investors with the 5 times daily long would suffer a loss of 30% only, instead of a loss of 51% with the airbag mechanism. Even though the airbag mechanism protects investors from extreme market conditions, investors should be aware that they may lose all, but not more than their initial capital when investing in daily leverage certificates in 2 situations. Let's see the illustration with a 5 times daily long. On any trading day, the opening level of the underlying asset may be higher or lower than the closing level on the previous day. The difference between the previous closing level and the opening level of the underlying asset is called a gap. If the opening level of the underlying asset has a gap of 20% or more versus the previous day closing level, the airbag mechanism would only be triggered after the market opens, and the daily leverage certificates would lose their entire value in such event. The second situation is when the level of the underlying asset falls by 20% or more compared to the previous closing level of the underlying asset, or the previous observed level within the 15-minute observation period in case of an airbag triggered previously on the same day. The daily leverage certificates would lose their entire value in such event. Important points to note. Investors should note the airbag mechanism can be triggered more than once per day, and the new trigger level will be based on the minimum observed level. The airbag mechanism will also maintain a reduced exposure to the underlying asset, even if the underlying asset starts to move in favor of the daily leverage certificates after the airbag mechanism has been triggered. This will reduce its ability to recover losses for investors. There is no guarantee the airbag mechanism will prevent investors from losing the entire value of their investment. For certain DLCs, the airbag mechanism may not be available or triggered in certain circumstances. Investors should read all listing documents provided by the issuer for the specific airbag mechanism for each product. To better understand the airbag mechanism, we invite you to visit our website, dlc.socgen.com. There is a simulator on our website where you can input the expected daily performance of the underlying asset to see the performance and compounding effect of the DLC for your reference. Please refer to the base listing document and the relevant supplemental listing document for more information at dlc.socgen.com.